AI is being implemented in so many places and has helped streamline workflows and even help people make money easily. I want to find out if we can devise a successful stock buying strategy to make money with trading. Trading can be done in different ways, but with in depth analysis, can we make profitable moves within just a week or two using AI? Okay, so the best way to do this is not to just throw it all into one prompt and just hope that, oh, it knows exactly what we're asking for and it'll give us a high quality result. What I am going to do is I'm going to prompt things individually to crowdsource better information and give the best possible inputs that we can give in order to receive the best outputs. So our first line of order is to use Chat LLM, which we will be using Grok for, to create a framework for a prompt system to find stocks with short-term potential and then analyze them to further determine if it's a good buy based on institutional standards. I would love to just do that all at once. It would be the quickest way, but we're looking for the most accurate. We're looking for the way that's going to make us money, give us the best analysis possible. So we're going to go ahead and split that up into two steps. So we want Chat LLM to create the framework for a prompt system to find stocks. We don't want to just ask it, can you give me some stocks with short-term potential and analyze them further? Like, that's too much. We're going to ask first, based on institutional standards, what needs to be analyzed in order to further determine if it's a good short-term buy. So based on everything I've said, you can see how I've just picked apart this one specific piece of all the information we need in order to properly do this. So what are some of the standards for institutional money to start buying or investing in a company's stock based on the business's fundamentals? Make sure these standards you provide are proven successful and will definitely make us money in 1 to 2 weeks. All right, so it has a framework for what it's going to do, and now it is going to start researching. Research complete. Wow, all right. Report further explores hybrid strategies that blend fundamental analysis with technical factors, illustrating why and how institutional investors sometimes adopt combined approaches for timing market entries and exits. Institutional investment and fundamental analysis. Key fundamental metrics include the PE ratio, the PB ratio, which compares market value to book value, the return on investment, which measures how effectively a company uses shareholder equity to generate profits, or return on equity, ROE, and then EPS, and earnings growth, which provide insights into the company's operational performance and profitability trajectory. The PEG ratio, which adjusts the PE ratio by expected earnings growth to give a more comprehensive view of valuation in the context of future growth. In addition to these numerical measures, institutional investors also assess qualitative factors such as competitive advantages, management quality, and marketing positioning. The comprehensive approach is designed to create a robust framework for evaluating long-term investment opportunities. It walks us through everything as far as what we had asked of it. So it gives us the core fundamental metrics for institutions, which they look at the price to earnings ratio, the return on equity, the earnings per share and earnings growth, the price earnings to growth ratio. All those things are taken into consideration when dealing with long-term investments, but it seems as if it has focused on short term since I had asked it for just a week or two to see returns. So it'll go ahead and tell us limitations for the short term trading. So it did give us a few limitations. Market sentiment and technical factors dominate short-term moves. It tells us about the lagging nature of fundamental data, and it tells us about empirical evidence and back testing. It then walks us into hybrid strategies for short-term gains. So acknowledging the limitations, many institutional investors adopt a hybrid approach that integrates fundamental evaluation with technical analysis and event-driven insights. This blended strategy aims to harness the inherent strengths of both methodologies. Combining fundamental with technical analysis is one, and then event-driven tactics is the next. So these will be the two strategies that we do want to implement in order to find these short-term opportunities. But in order to get the actual stocks themselves that we should be buying, we are now going to use what it has just told us. So we are going to make sure that it takes into consideration all of these PE, the PB, the ROE, the EPS, the PEG. We want it to take into account all of these things. And if all of those things check out, if they all signal for a buy, then that's when we will allow it to use one of our two strategies. Now, I'm giving it two strategies because if we give it just one strategy, sometimes with algorithmic trading, it might bring back no results at all. So I want to make sure that we're getting options. We're given options and a few different options, and hopefully some are combining fundamentals with technical analysis and some are event-driven tactics. We decided that we're going to at least try and enter the prompt into the same agent and see if based on the memory, if it will give us a good result. If not, we can take all the information that it gave us and then go and open a new agent, which hopefully we don't have to do. Hopefully this works. That would be much easier. The prompt we've chosen is based on the core fundamental metrics you found, find 5 stocks that fit enough of these conditions to consider for an investment. These 5 stocks also each need to use one of the 2 strategies in order to qualify for an investment. So if the core fundamentals metrics are met and there isn't any entry based on the 2 strategies you devise, then find a different stock. Boop. Deep research, and voila. We'll see how this does. Clarify the tasks and constraints. Find 5 stocks that meet core institutional fundamental metrics. Each stock must also qualify for investment based on one of the 2 specific entry strategies. If the stock meets the fundamentals but not entry strategy, it should be replaced. So we got the core fundamental metrics again. We got all those. And then the 2 entry strategies. And it gave us a step-by-step research plan, which it looks like it's doing now. They're going to screen for stocks that meet the core fundamental metrics. For each candidate, they're going to check if it's recently triggered one of the 2 entry strategies. If not, move on to the next candidate and repeat until 5 qualifying stocks are found. For each stock, document which entry strategy fits and provide supporting evidence, recent earnings, chart breakout, etc. And then lastly, the iterative research cycle. Start by identifying stocks that meet the core fundamental metrics. For each, research recent earnings events and technical chart patterns. Adjust the list as needed to ensure all criteria are met. And it is screening for US stocks. Thank you. I didn't specify that. And it has completed. So we now have our 5 stocks. And the best part of this is if this was something that were to work, this is so easily replicated that you could take this, I can take this. As you can see how thorough it's been. Now let's go ahead and take a look at some of these stocks. We're going to pull up TradingView. Okay, so this is the daily chart of Cisco. Now, hopefully this thing's right. It's saying within 2 weeks we should make a profit with a buy entry here. Entry should be around 67.18. Moving on to the next, we have Pfizer, PFE. Now this one seems to be on the opposite end of the spectrum. That little short period is 2 weeks there. So out here, by here it should play out. But as you can see, Pfizer is really, really low at $24. And now we're moving on to the next, which is Intel. It looks as if Intel is also down. Naturally, I'm going straight back to 08. As you can see here, bear flag spike up before heading lower. Potential bear flag. Are we going to see a nice spike up in the next couple weeks? We will find out. And the next stock is called Abbott Laboratories. It is in the healthcare sector. Abbott. So this one does look like it is in a strong uptrend and a very continuous uptrend. So yeah, I think pullbacks are for buying on this stock. It seems historically, it almost looks like an index fund. How steady that is. So if we do want to get an uptick, break some new all-time highs, then yeah, this looks great. We will just have to see. For our final stock, we have Honeywell International. So this one did have a nice, beautiful spike up. Very solid. A lot of strength on this one. And again, it does look like it looks like an index fund. It looks very steady uptrend. So these might move similarly. All these moves that we're looking for, like this little move was the span of 2 weeks. So we're almost looking for something like this. Like, look, this was the 1st of July. It is now the 15th. And there's been some trading days off, so it's a little longer. But we will see this play out. So let's go ahead and walk through each of their buy signals. For Cisco is a technical breakout. In the latest market session, Cisco demonstrated a decisive technical breakout. The stock recently closed above its 50-day moving average, accompanied by significant surge in trading volume. This pattern indicates fresh demand and possible bullish trend in the near term for those seeking a short-term gain. For Pfizer, the entry signal was earnings momentum. Pfizer has recently reported quarterly earnings that significantly beat analyst estimates. In addition to the earnings beat, the company provided improved guidance for the upcoming quarter. The subsequent aggressive price action with a clear gap upwards and elevated trading volume confirms an earnings momentum entrance, making this stock an attractive candidate for a short-term position. And for the Intel Corporation stock, our entry signal is earnings momentum as well. Intel most recently surpassed consensus earnings estimates, which was quickly followed by an upward revision of its future forecasts. The market's reaction included a notable uptick in trading volume and a short-term price rally, establishing an earnings momentum entry signal suitable for near-term investment horizon. For our fourth stock, Abbott Laboratories, our entry signal is a technical breakout. Abbott Laboratories has recently shown a technical breakout pattern. The stock has broken through a long-standing resistance level, closed above a key technical barrier on high volume. This breakout, as seen in its recent price charts, signals potential inflection point, conducive of a short-term investment entry. And for our fifth and final stock, which is Honeywell International, our entry signal is earnings momentum. Honeywell recently reported quarterly earnings that exceeded market expectations. The announcement was accompanied by a robust commentary on future performance and a significant uptick in trading activity. The resulting price action has created an earnings momentum signal, indicating a timely short-term entry point. So, the 5 stocks that we identified, or that AI identified for us, Cisco, Pfizer, Intel, Abbott, Honeywell, they each satisfy our core fundamental metrics favored by institutional investors. In addition, each candidate has manifested one of the 2 actionable entry signals, either a technical breakout or a strong earnings momentum event. These dual screening criteria ensure that each stock not only possesses a robust underlying financial profile, but it also is positioned for short-term price appreciation. For investors with a short-term horizon of 1 to 2 weeks, combining these fundamental and technical insights provides a disciplined, evidence-based approach to portfolio selection. So, all that being said and done, all I'm going to do now is wait, and we're going to see how these things play out. So we will see you guys in 2 weeks. A quick disclaimer, this video is in no way, shape, or form financial advice. This is for educational purposes only. Sue me. Here we are, 2 weeks later, officially July 28th. We started on the 15th, so that's exactly 2 weeks, and the market is closed, so we got a good idea the type of returns that we have gotten. So for Cisco, we began at $67.58, and we ended at $67.85. The higher end of this trading zone would have been a good place to exit. We were going strictly on a time frame entry and exit, so we did pretty much break even on this one. So if we go to $67.58 to the current price, 0.35%. But if we were to go near the top of that range, put $1,000, that's $13, 1.36%. On to the next one. Pfizer, PFE, July 15th. We did enter, boom. What did we enter at? 24.51. So we entered back here, 15th. So from that point, we are officially down 0.76%. But at the top of the range for the last couple weeks, we were up a solid 3.5% from the point we entered to the point today, 2 weeks later. We are down 0.7%. Moving on to the next, which was Intel, INTC. Looks like it might be a similar story here. All right, well, let's see. We started this week for Intel at $22.90, which was back here. We are down 10% on this one. Wow. That could wipe out all the gains. And that was outside of trading hours. So if we're not trading futures, we don't have access to trading this. If we're just sitting in this one, waiting for it to go up, and then it opens way down 10%, and say we have to exit. Say we exit right when it opens, we lost 8%. Say we had a stop loss and it triggered the second the market opened, we would have lost 8%. I think it's fair to say it was very, very wrong. At the very peak, it was up 3%. So this one is a little volatile compared to some of the others. Let's go ahead and move on to the next. We do have ABT, Abbott Laboratories. At the peak, we were up 1%, and at the very bottom, we were down another 9%. So say we had a stop loss in place. When the market opened, it would have triggered, and we would have lost 3.5%. But from the current price here, we are down about 4%. Another loser. Let's go ahead and check out Honeywell. HON. Another very similar looking chart. So go back to the 15th. We entered at 235.30. From our current price, we are down 4.2%. Near the top of the range of the peak, we were up 2. If we had a stop loss and it had triggered when the market opened, 3.5% loss. So, in conclusion, as you can tell, I'm a bit rattled. I figured it would give us a good idea of maybe what could be in a strong uptrend based on institutional standards, right? And of course that it did warn us about the short term and the uncertainties that come with trading in short term. It was definitely a fair warning. So as you can see, if we put $200 into each of these stocks, which is $1,000 total, these are the final numbers that we would have gotten for each stock. We only made profit on one, but $963.58 is the total at the end. So we lost about $40. Yikes. The gains just weren't even anywhere close to the losses. And I'm sure, if it was a winning week, maybe it would have been a different story. Maybe we would have seen some gaps up, seen a different outcome. Would I want to deploy money myself based on the strategy it has given us? Definitely not. Definitely not. I don't know what it's looking at, but it's pretty far off, at least for the short term. Maybe if we tried the same exact thing for a month out, 2 months out, maybe we'll get a different story. But with this experience, with this experiment that we did run, it looks as if, not our lucky day, we are not going to be rich quick from AI through this means.